Welcome back to the channel. It's an absolutely beautiful day here in South Florida. In fact, I was actually going to film outside. I set it up by my pool and everything, but the light was a little low. I would probably have to invest in some more external lighting to make it worthwhile. So here I am back in my study, and today I wanted to talk about one of the secrets to getting rich that not a lot of people put a major focus on. So, a lot of times I'll see investors, traders looking for that magical stock, the next Nvidia, that next 100 bagger, triple digit return, sort of stock ticker as lottery ticket. Or if they're a trader, they're in trading view and they're looking for this magical indicator, again, that's going to turn 5,000 into to 50,000 or 500,000. But along the lines of the tortoise versus the hare, one of the secrets that has made me a millionaire, and I believe will continue to ensure that I'm a millionaire and to continue to grow that wealth, is reinvesting of dividends and reinvesting of option premium. Um, I'm not going to go down the rabbit hole of options too much in this video, but option premium is when you sell an option versus buy an option, you receive capital. And a lot of times people will promote covered calls or cash secured puts to retirees as a way to earn income in retirement. But their idea is really to earn income in retirement so they can take that capital and that premium and use it for consumption to pay their phone bill, their electric bill, their car payment, their mortgage. Um, but one of the secrets that I feel is, again, taking your dividends, taking your option premium, and reinvest. Then, if you really want to take it to another level, it would be the Trinity, and the Trinity would simply be reinvest in option premium, reinvesting dividends, and dollar cost averaging. So let's just start here. This is my Schwab account, which as of today is about 570 or so. And this is a cool, I'm going to reduce this just a little. This is a cool little feature which they show is the income based on dividends on this account. So you can see January 2024, 1285, February dipped 858, March 1745. Thus far in April 262, and I have about 900 remaining, so over 1100. So we just go here 1847, 2063, 15, so we're going here 16. So it looks like February will be the last month that I'll be under $1,000 in the Schwab account on just dividends. Now, I also took in approximately $3,300 in option premium in February and $3,800 in March. So in March, between dividends and option premium, I walked away with about $5,600 in income. Now, what did I do with that money? First of all of those dividends went into purchasing more shares of the stock where the dividend came from. And the option premium went to buying income. One of the things I like to do with the premium is I like to buy either dividend stocks, dividend ETFs, closed-end funds, covered call ETFs, so on and so forth. So I'm increasing the snowball, essentially. And so to me, that the fact that if you can, for as long as you're able, to take that dividend and option premium and continually put it back into the compounding machine, when you go out 10, 12, 15, 18 years, you're likely to be a lot wealthier. So for example, that 5,600 that total last month, just in the Schwab account, in 10 years could be 10,000 a month, 12,000 a month, 15,000 a month. And then that alone supports your lifestyle. And it really goes back to the power and the principle of compound interest. Just have a couple of things here. Let's go here now. So this is just a couple from the god of investing, Warren Buffett. Uh, Time is your friend, impulse is your enemy. Take advantage of compound interest and don't be captivated by the siren song of the market. And then elsewhere, he said that his wealth comes from a combination of lucky genes, living in America, and compound interest. And this is a quotation of mine that this guy here shared. If compound interest is indeed the eighth wonder of the world, then leverage compounding is certainly the ninth, 10th, and 11th. That's just kind of a reference to my use of leverage ETFs, my successful use of them over the years. Last year was a 33.3%. This year off to a pretty good start. But just going back to that idea of compound interest. So let's actually go back to the Schwab here. And let's go to history. Just wanted to show this here. Okay, and let's even go one bigger. So you can see when I tallied this up the other day here on the 4th, April 4th, this was over $100 of dividends from that, just on that day. And what's interesting here, you see IWMY, $10. That was purchased just recently from essentially me printing money within the account by selling options. Remember, I always say those who buy options are essentially the gambler, and those who sell options are essentially the casino. And remember, sometimes the gamblers win. Sometimes the gamblers, you see people like in Wall Street Bets on GameStop and YOLOing by buying options. It's not my cup of tea. It's not how I've built my wealth. It's not part of my strategy. But to each his own. So anyway, so by buying income, this is $10 that was created from the premium, and then this was reinvested. So that money that created this 10 then goes back into the asset, which then throws off more money. This is likely to be 12 next month. Iron Mountain is a REIT that I own, $22. Vici, another REIT. QQQY, look at this, $47 in free money because QQQY I purchased with a premium. Remember, I made around 3,300 in February and 3,800 in March. All of that 3,300 and all of that 3,800 in income went to purchase assets like this. Right now, I'm buying a lot of like Defiance, Neos, and Roundhill, and then I'll do that for 2024. 2025, I might switch and I might buy dividend ETFs. I might buy NOBL, VIG, SCHD. Maybe I look to, what is it, Global X, QYLD, covered call ETFs, and or maybe I go to closed-end funds exclusively, or BDCs or MLPs, but looking to buy income. Again, $9 here, another 7 in free money. So yeah, just wanted to kind of showcase that, and then all those dividends are being reinvested. So let's go over here now to the compound interest calculator. I like to kind of end my. No, it's actually over here. I like to kind of end my videos, kind of geeking out with the compound interest calculator. It's a lot of fun for me, and just shows really the power. So what I did is I calculated my composer. Let's go over, just quickly show composer, and then we'll come back. So with composer, I was down. Yesterday was a big down day. I was down about 2.75%, but back up 2.13%. So far this year, over 7.05%. That's slightly under the indexes, but it's still very, very early in the year. So if you take this number here, minus 290, so I'm up about over 20,000 in composer for the year. Cost basis is 290. But so if you take, I did this before the video, so it might be slightly different. The value of composer, and we'll go to summary here. I'm jumping all over the screens, but just wanted to, kind of verify that. If you take this, and then you have to add the option value, because that's not really a negative. So when you sell options, it's considered a short position, so it's about 570 on 568 in account value. When you take those two, it is approximately 880. It was, I think, 879 and change. So I just round up to 880. And as I mentioned, between the dividend reinvestment and the option premium, it was actually a little bit more than this. It was 56 last month, but I just put 5,000. So this would, let's say if it's a combination of dividend reinvestment, option premium, dollar cost averaging, you do 20 years on these two accounts. And what I did is I did 15%, very modest number. I mean, some people would say it's high, and it definitely is for the indexes. Again, I did 33% last year. We'll see what this year holds. But what it does is it's also a 5% variance. So it's going to show 10, 15, and 20. We'll play with this. And when you do this, so when you see it 10% on this 880,000, it's $20 million. Excuse me, no, at 15% it's $20 million. 10% is still 9.3 million, and 20% is almost 45 million. So let's just play with this a little bit here just to kind of show you. Let's go. So now it's going to show 15, 20, and 25. So you're at almost 100 million on 25%, 44.9 on the 20, and then 15% is 20 million. Let's go last year. And again, I just kind of for fun, it's not saying that I'm going to get a 33% return. So now it goes to 651 for 38%, 318 million for 33, and 152 million for 28%. So now let's actually remove that monthly contribution. So let's look at the numbers again. So we're at 650, 318, and 150. 631, and if we do calculate, so you can see the big difference. I think the lowest one was 152 million, still 122. So it's still amazing. And this was in the sixes, so that was maybe $100 million difference there or so. With that power of contributing via dividends, dollar costing, and option premium. So yeah, that's just a little secret that it's not a secret. I mean, people know it, but again, I just think many people are again looking for kind of stock ticker as lottery ticket, trading indicator as lottery ticket, buying options instead of selling option as lottery ticket. And this is something that's pretty basic. And then I'll just finish with this. I remember I had a conversation with someone in Canada at one point, and she had worked for a pharmaceutical company. And in her brokerage account, she neglected to click the box dividend reinvested. She had stock in a company, and she just forgot to check that, or she didn't understand it. She didn't really know. And she thought it was cool that all the cash was accumulating. And when we did the math on it at the time, it probably cost her anywhere between 500,000 to 700,000, which could be a huge deal in retirement. It could be the difference between having a great retirement or being a little bit cash strapped, just by not understanding the principle of dividend reinvestment. So hopefully you don't make that. Some people will do different strategies. Some people will not reinvest their dividends into the asset that gave the dividend. They'll let it go in cash, and then at the end of the month they'll choose one asset to then reinvest. So that's also, a decent strategy, good strategy as well. But the main thing is that you're constantly piling in and pushing that snowball down the hill, creating more and more snow sticking to it. So anyways, that's it for today. I will be back soon. Take care. Ciao.